Clearly the knee-jerk reaction, because Facebook's a top-line growth story. When you're trading at 9 times price to sales and the headline is that you miss your top-line number, that's it. The market's going to take you to the woodshed. But when you peel back the onion, the fact that they increased their headcount 45% and they were able to beat earnings by that much, that's why you see the stock trending.
They had a better tax rate. But to your point, 33% revenue growth. It was a slight miss, but Julia said they blamed foreign exchange. Otherwise, it would have come in line. Also, the context, I think, here is key. This is a stock that was down more than 30% from its last earnings call.
Yeah, no question. That's why I think the margin and the fact they would beat on earnings was so important, because they threw out this number that their margins are going to degrade to mid-30s at some point in time, but they didn't give any color on that.
Scott, what's your initial take?
What I think about this is actually quite different than what John was saying. Look, there was reference earlier to the fact that this stock trades at 20 times earnings. One of the reasons that we've seen the stock decline so much is not just concern about the fundamentals, but frankly a substantial turnover in the investor base, going from growth investors to largely value investors to some extent. And if you look at 33% growth, just to put a point on it, the expectations were for $13.8 billion in revenues. They reported $13.7 billion in revenues. That's essentially a rounding error. The fact that Facebook was able to deliver that, given all of the concerns, really says, I think, a lot about the company, in that it's not going anywhere anytime soon. The shares have fallen 30% from their highs, I think, in July. And so we have seen this as a buying opportunity really for the last week or two.
Mike?
Yeah, I mean, I think if you really want to dial back big picture, you're not seeing any evidence in the numbers of user flight or, advertiser departure. So if you really were worried about the way it was going to impact the platform itself and the ability to monetize, it's not there yet. It's really just a matter of what it's costing them to maintain it and improve it and maybe fend off a lot of the challenges.
Well, I guess, Ed, are these investments 45% jump in headcount, 53% jump in costs? Do you believe that's going to result in higher operating income and higher earnings down the road? Or is it just the cost of doing business now in a world where Facebook and others are being scrutinized by Congress?
Well, I think the cost is a definite factor in terms of the idea of getting the cycle back up so that the next quarter or the next cycle you're going to see beats on the top line. Pulling back, though, Amazon last week and also Alphabet, Google, they missed on the top line but beat on the bottom line as well. So it's an interesting trend line that we're seeing, at least with the big tech issues, where, like the growth isn't quite there, but we're able to hold a lot more of the money back. Yeah. The reinvestment certainly is going to be key. I think the slowdown is an important factor to look at. I think the press release noted Mark Zuckerberg sort of started to change the narrative a little bit. It said, there's another number I'm going to give you. 2 billion people use one of our services every day. That's Facebook, Instagram, and WhatsApp. Every time you give a new number, you're trying to change the narrative a little bit. I'd like to hear more about that on the call.
So, Scott, I'll go to you because you're the bull. How do you put these numbers, which clearly vindicate your case for buying the stock, into a context where the company has seen, at least a dozen high-profile, high-ranking executives leave over the last year, where it is bashed by both sides of the aisle? We are heading in a few days to a midterm election where there's all sorts of talk of regulation, and Facebook has become the poster child for issues around election interference, privacy concerns, hack attacks of personal information, and you name it.
Well, yeah, it's a handful of issues to deal with for sure. But I think a lot of those are priced into the stock. Meanwhile, Facebook has over $40 billion in cash and investments and has a lot of financial flexibility. So they're going to spend away for a variety of reasons, not the least of which is to prove to people that they're serious about addressing some of these problems. All the while, it's trading at 20 times earnings. They just grew the top line after significant deceleration at 33%. And you know what? They have a lot of new heads of some of their, let's call them emerging businesses, Instagram, WhatsApp, Messenger. And I think that the new heads of those businesses are going to be more in line with the way Facebook does things and look to monetize a little bit more aggressively. And I'm not talking about making it so that no one's going to go on the platforms, but I'm saying striking a balance that's going to be more financially advantageous for the company and better for shareholders.